Everyone's talking about Trump, about Iran, about missiles and ceasefire deals, and who blinked first. And look, I get it. It's dramatic. It's got everything a news cycle loves. But here's what nobody in traditional financial media will tell you. The war with Iran was never about nuclear weapons. It was never about terrorism. And it was never about protecting allies in the Middle East. It's about something far more boring and far more dangerous. It's about who controls the currency that the entire world uses to buy oil. And if Iran wins that fight, the consequences for your portfolio, your mortgage rate, and the U.S. economy are more serious than any missile strike. Here's the thing about the United States dollar. It isn't just a currency, it's a system so deeply embedded in global trade that most people never even think about it. Like not thinking about the plumbing in your house until it breaks. And right now, in the middle of a war that looks like it's about geopolitics, that plumbing is being quietly ripped out of the walls. So in this video, I want to show you the financial system hiding underneath the war headlines. Because once you see it, you'll understand why every Middle East conflict for the last 50 years has followed the exact same pattern, and why Iran, right now, is doing something that has gotten every other leader who tried it either invaded or killed. Act 1. The Petrodollar, the most powerful deal nobody talks about. To understand what's really happening, you have to go back to 1971. That's when President Nixon did something that changed the global financial system forever. He ended the gold standard, meaning the US dollar was no longer backed by physical gold. It was just paper, backed by the full faith and credit of the US government, which, when you say it out loud, sounds terrifying. And it was. Because without gold backing the dollar, why would anyone want to hold dollars? The answer came 3 years later in 1974, and it came from the last place you'd expect. Saudi Arabia. The US and Saudi Arabia struck a deal. Saudi Arabia would price all of its oil sales exclusively in US dollars. In return, the US would provide military protection and a guaranteed market. And then Saudi Arabia would take those oil revenues and recycle them back into US Treasury bonds, essentially lending the money back to America. Other OPEC nations followed. And just like that, gold was replaced by oil as the foundation of the dollar's global value. Every country on Earth needs oil. And now, every country on Earth needed dollars to buy it. That's the petrodollar system. And it's the single most important financial arrangement of the last 50 years, because it gave the United States something extraordinary: the ability to print money, run deficits, and borrow at low interest rates almost indefinitely, because there would always be global demand for dollars as long as oil was priced in them. It's the closest thing to a financial superpower the world has ever seen. Act 2. The pattern. What happens to leaders who challenge it? Now here's where it gets dark, because once you understand the petrodollar, a very uncomfortable pattern starts to emerge. Iraq, 2000. Saddam Hussein announced that Iraq would stop accepting US dollars for its oil exports. From now on, Iraq would sell oil in euros. He said the dollar was a tool of American imperialism. 3 years later, the United States invaded Iraq. No weapons of mass destruction were ever found. But one of the very first actions of the US-installed interim government was to switch Iraqi oil sales back to dollars. The euros lasted exactly as long as Saddam did. Libya, 2009. Muammar Gaddafi had a bigger idea. He wanted to create a pan-African gold-backed currency called the gold dinar, designed to let African nations sell oil and resources without touching the US dollar or the IMF at all. Libya held 143 tons of gold to back it. In 2011, NATO intervened in Libya's civil war. Gaddafi was captured and killed. Hillary Clinton's leaked emails later revealed that preventing Gaddafi's gold currency plan was explicitly discussed as a motivation for French involvement in the operation. The gold dinar died with him. Now, is there a direct causal line between these currency challenges and these interventions? Historians debate that. There were other factors: sanctions violations, humanitarian crises, post-9/11 strategy. But here is what is not debatable. In both cases, after the regime fell, oil went back to dollars immediately. And no one in traditional financial media asked why, because that's the pattern. And now, Act 3. Iran and the Yuan, the live experiment. Since the US and Israel launched joint strikes on Iran in February 2026, something extraordinary has happened. Iran didn't just retaliate militarily, it went after the petrodollar directly. Because Iran controls the Strait of Hormuz, the narrow waterway through which roughly 20% of the world's oil passes every single day, every tanker, every barrel, flowing through a gap 33 miles wide. And Iran started charging tolls in yuan, not dollars, yuan, Chinese currency. By April 2026, reports confirmed that at least 2 vessels had settled transit fees in yuan, with a Chinese maritime company acting as the intermediary. Now, is 2 vessels enough to collapse the petrodollar? No. But here's what makes this different from Saddam or Gaddafi. Iran has China behind it. And China isn't just buying Iranian oil at a discount. China has been systematically building the infrastructure for a post-dollar oil market for a decade. Yuan-denominated oil futures, bilateral trade agreements, a digital yuan designed for cross-border settlement. The dollar's share of global foreign exchange reserves has already fallen from 71% in 2000 to around 56% today. Central banks globally have been buying gold at over 1,000 metric tons a year for 3 consecutive years. China has cut its U.S. Treasury holdings from $1.3 trillion in 2013 to just $682 billion by late 2025. This isn't a country randomly picking a fight. This is a country systematically dismantling the financial architecture that gives America its power. And the Iran war, whatever it is militarily, is also the front line of that financial battle. Why this matters for your money. So what does any of this mean for you? Because here's the part traditional financial media conveniently forgets to explain. The petrodollar system isn't just geopolitics. It's the reason the United States can run trillion-dollar deficits without the dollar collapsing. It's the reason America borrows at lower interest rates than any other country on Earth. It's the reason the Federal Reserve has the luxury of being the world's most influential central bank. All of that runs on one assumption, that global oil demand equals global dollar demand, and that assumption is cracking. Because if the yuan becomes a viable settlement currency for even a fraction of global oil trade, if the Strait of Hormuz becomes a place where dollars aren't accepted, then the artificial global demand for US dollars starts to erode. And when that happens, the math changes everywhere. The US has to offer higher interest rates to attract buyers for its debt. The 10-year Treasury yield rises. And as we've covered on this channel before, the 10-year Treasury is the foundation of every asset valuation model. It's what sets mortgage rates. It's what determines stock multiples. It's what drives corporate borrowing costs. A weaker petrodollar doesn't just hurt America's geopolitical prestige, it tightens financial conditions for every American who has a mortgage, a retirement account, or a small business. And the most dangerous part? It happens slowly, not in a crash, not with a headline, just a quiet, grinding tightening of the cost of money. The kind of thing that doesn't trend on Twitter and doesn't get covered on CNBC. The war with Iran is real. The missiles are real. The casualties are real. But underneath all of it is a financial battle that has been building for 50 years. Saddam tried to break the system. He's dead. Gaddafi tried to replace it. He's dead. Iran is trying to route around it, with the backing of the largest economy on Earth. This time, the pattern might not hold. And if it doesn't, if the petrodollar system starts to fracture in a meaningful way, the consequences will show up not in a news alert, but in your interest rate, your inflation number, and your cost of living. That's what this war is